Welcome to another episode of Equity Mates on a Wednesday, which means it is Watchlist Wednesday. And to go through it with me, as always, is my equity mate, Ren. How are you going?
I'm good, Bryce. Best time of the week. We've made it through more than half the week.
Sit back, relax.
That's it. Markets have closed, and now you get to the most important part of the day, where you get more information than 10 to 4 trading. Watchlist Wednesday, and we've got a returning guest. One of our favourites.
One of our favourites, as he always provides us with, stocks that either we haven't necessarily put on our watch list, but today we're equally excited because these are stocks that we weren't expecting to come onto the watch list. And to talk through it, we are joined from Marcus today, Henry Jennings. Henry, welcome to Equity Mates.
Hi guys, thanks for having me on again.
Always a pleasure chatting with you. Last time we spoke, I think we were touching on a few stocks that were certainly not on my watch list. There was the concrete one, can't even remember what it was called.
Silex,
yes. But today, Henry, we've got 3 stocks that I presume a lot more people would have heard of: Appen, Treasury Wine, and A2 Milk. Why, before we jump straight into them, why 3 stocks that I guess no one's ever heard
of? Well, I guess these are all 3 stocks that have fallen from grace for one or another reason. There's a couple that have had factors outside of their control affect them, and of course there's one that has had some other internal factors as well in terms of business. So they're all been affected to some extent by China and the tariffs there and the slowdown there and the way the international tourism has worked against them. And they are all, as I say, former sort of glory stocks. We're looking at Appen, which is APX. We're looking at A2 Milk, which again is another former glory stock. A2M is the code. And the last one is Treasury Wine Estates, TWE is the code there. So all very much under the pump, under pressure, and all looking interesting, and certainly should be on people's watch lists, I think.
Yeah, nice.
Well, let's start with Appen. As you said, ASX ticker APX. Why is this stock on your watch list? Actually, and for people who aren't familiar with the stock, can you tell us a little bit about it as well?
Well, Appen is involved in data analytics, and it's kind of it provides the backbone for some of these intelligent services like Siri and Google and Alexa and all those sorts of things. So it kind of helps companies that are involved in that space, in software, speech recognition and that side of things, get into that. And it has been suffering in recent times. It used to have, I think it used to advertise it had sort of 1 million people that work for it, subcontractors that were analyzing data, going through data and making that those speech patterns, etc., much more data friendly for companies involved in AI and processing that data. But it has been struggling, and part of the reason is the foreign exchange rate, the FX rate. That strong Aussie dollar has hurt as well. Plus, it seems to have gone ex-growth, and it keeps downgrading earnings. And of course, growth companies do live and die by the fact that they need to grow, and this one actually hasn't, and has slowed down dramatically. Now, some of that is to do with COVID. Some of that to do is the slower advertising market that we've seen globally due to COVID. And this one has really been suffering, but it peaked at around $44. And here we are at a fraction of that at the moment. So for me, it's starting to show some signs of bottoming technically as well. I'm not saying jump in now because these do have risks. And what we see with these 3 stocks is they're very much kind of second half stories, and the market doesn't really like second half stories. So it is a bit risky, but it is showing some signs that maybe there is a little bit of a bottom, a slight bottom anyway, in sight, and maybe we'll get to see some buyers step back in. But they've had downgrades after downgrades, and that really doesn't endear confidence in the market. And there is a question mark over whether the whole of the business model is changing slightly, and they haven't been quick enough to adapt to it. So that is certainly part of the problem with Appen as well.
Yeah, so Henry, how do you play, like, what's the interplay between, like, obviously you're using some charts here and technical indicators to suggest that it might be getting towards a bottom, but then the fundamental side where the company keeps, bringing out downgrades to earnings and thinking about it more broadly as a business. How do you think about entering and exit stocks with that sort of interplay?
Well, I guess, you've got to, for me, looking at stocks is a question of looking at the fundamentals, looking at the story. I'm very much a story kind of person. And then it's a question of timing and looking at the charts for that timing. And Appen was one of the firm favorites. You only had to mention AI or data analytics or anything like that, and people would pile into Appen, and it was seen as a market darling. It really has fallen foul of that. It got down to $16, which actually below $16. It has bounced off that, and it is showing signs of that bounce. And it does look as if, on the technical picture at least, that bounce could be in, and it could push back up at least towards the $20 level. Of course, that's an optimistic scenario. Brokers have got their targets on this one, which are still higher than the market price now, but they have been reduced dramatically. But certainly, when you look around at where the money is at the moment, there's a lot of money around. There's a lot of money going into some silly things. We're seeing Bitcoin at $61,000 US, which, still I scratch my head and think, I can't get my head around that one. I've got to say, it's beyond a simple man like me. But I can look at the chart in Appen, and it's come from, around this level, say a year ago when it was around $17, and it's found that level again. Here we are a year later, having hit $44 in August last year. That's a big run from 17 to 44 and back to 17, and it's just showing signs of life now. So I'm not saying jump on board, but it certainly is looking an interesting opportunity, especially given at the moment we've got a lot of tech headwinds in the traditional tech stocks that we're seeing, especially in the buy now, pay later sector, which becomes very dominant in tech, whereas this one has really fallen out of favor. And we even saw it with WiseTech, and they did the same. They fell out of favor, got hit by short sellers, and they found a level where people were prepared to buy them. And I think around $16, $17, this probably does fit the bill as an accumulate and keep a watchful eye on it for this bounce to continue.
Yeah, nice.
So Henry, then the second stock on your watch list today is Treasury Wine Estates. As you said at the beginning, obviously a stock that's been heavily impacted by China, and its fate is tied to the China trade stories in some way. Why is this stock on your watch list?
I guess it's opportunistic. There is a lot of money around at the moment. Let's face it, we know there is. Private equity is stuffed full of money. Globally, companies are looking for places to put that money to work with interest rates as low as they are. Now, for me, Treasury Wine Estates is a good brand company with some very, very good products that obviously has suffered through circumstances to some extent beyond their control in terms of that Chinese tariff war that we're seeing with Australian wine. Now, they are trying to obviously steer the Australian wine away from China into other markets, but it's not that easy to pivot that quickly. We did also see them the other day with their US business sell off 4 brands for around $100 million. And I just get the feeling that if you were a big global drinks company, and Pernod Ricard has been one mentioned in relation to this, that these are the sort of times when you can pick up this sort of massively marketed, very well branded company, and when it's in a slight distressed situation because of China, and you can pick up that company for not cents on the dollar, but certainly under some pressure and extract value over time. We are seeing some thawing, I guess, in that Chinese-US relationship. We've got some of Biden's people meeting some of Chinese people to discuss things. So hopefully we could see a little bit of thawing in our own relationship with China, and maybe some of those tariffs wound back, which would give this stock a big fillip higher. But for me, they've got a great brand. They're splitting the company into sort of 3 divisions, which has been mooted before, and there is always the possibility that they would then demerge or sell off or do something with something like the premium brand of Penfolds, which is obviously the jewel in the crown here for Treasury Wine Estates. But if I was in charge of Pernod Ricard or Diageo, then I'll be looking at this and going, you know what? Maybe now is the time to strike. They've got a CEO that has not really got his feet under the desk for that long. Company going through a transition, trying to pivot away from a crucial market. Those tariffs in China, it does look as if it could be on the cards. There's been numbers mentioned in the media around sort of $15.50 for this one. It could be opportunistic, but we have seen in the past that these are the times when corporate raiders and global drinks companies do strike. So for me, the upside now is higher than the downside. So the risk reward is tilted in favor of being long this one. It's obviously timing is crucial. Between $9 and $10 would be nice. They have perked up to 11 on the back of some of these media reports, but between $9 and $10, I think that it's worth looking at Treasury Wine Estates, certainly, and it should be on your watch list. You'll wake up one day, it may be in 6 months, it may be in a year, maybe in 2 years' time, and someone will have bid for Treasury Wine Estates. Then it will just be game on, because I suspect it won't be the only company to bid for them.
Fascinating. Certainly will add that to my watch list, because I would love to see that bidding war play out. Henry, another company that has their story closely tied to China, and that is A2 Milk. We recently spoke about it on the show, so very keen to hear your thoughts on why A2 Milk is on your watch list.
It's funny, guys. I mean, it wasn't that long ago that that white powder was gold dust in the Australian Stock Exchange. You know, we went through that period where we had anything that was going into infant formula in China or Asia or anywhere really. A2, Bellamy's, Blackmores, Bega had a go at it. There was a number of others. You've got Bubs, etc. And they were all going nuts, and the market could not get enough of this. Since then, of course, things have changed, and we have seen COVID really changing. The biggest channel, I guess, that A2 Milk had, which was that Daigou channel, whereby international tourists from China would come in here, load up suitcases, and send that product back to their friends and family in China. And that was kind of the unofficial import channel into China. Since then, of course, I think we've had 3 downgrades for A2 Milk in 6 months. So this is not good. We don't like downgrade cycles, and we do like to see a little bit of sort of steadying of the ship. Of course, we've also lost a CEO as well, which wasn't handled particularly well. She went to Virgin Australia. But when you look at the charts, it's been horrible. From around $20, here we are now down at $8.70 or something, and it has been just one-way traffic. But again, it's starting to look more interesting at these levels. Of course, a lot of it's going to be predicated on China and Australia resuming that exchange of travellers and products, which does seem to still be some way off, I have to say. So again, this is one for the watch list. This is not one for rushing out and buying, but it's just starting to creep up there in terms of I think the market's radar, that maybe it has been just a little bit too oversold, and that as we go forward this year with vaccines being rolled out, and maybe that cooling of the tensions between Australia and China, we could see a return of that Daigou market, albeit slowly and tentatively, and that would obviously help A2 Milk there. And really and truly, when you look around to its competitors in that market, there's not a lot I mean, you've got Bellamy's, but that's gone pretty quiet. That's no longer ASX listed. So, you know, there's some of the Chinese companies are catching up, but you know, that white powder that we saw, the gold dust, I suspect at some stage it will become attractive for investors to go back into that. And it may be even that you know, a multinational, someone like Nestle, which has pushed into its own branded A2 products as well, could also have a look at this as a sort of a massive kickstart to its Asian ambitions. So for me, it's just looking a smidge oversold, looking interesting here, certainly one for the watch list.
Nice, Henry. Well, that is all we do have time for, but yeah, 3 stocks, well-known stocks, I would assume, for a lot of our audience, but some pretty, I guess, convincing reasons as to why to add them to the watch list. As you said, it's certainly not a buy recommendation, but given the sell-off on all of them, I'm sure they are becoming a bit more attractive to some investors. So, as always, thank you for your time on Equity Mates, and I can guarantee you will be back on.
Well, that's good to hear, guys.
No, always a pleasure. Thank you, Henry.
Thanks, guys. Always a pleasure to do your show.
Well, that is all we have time for today for Watch List Wednesday. Just to recap, we have Appen Treasury Wine, or Appen, however you pronounce it. Treasury Wine, ticker there is TWE, and A2 Milk, A2M is the ticker there. So if you are interested and convinced by what Henry was saying, add them to your watch list. But when tomorrow?
Tomorrow we are talking Roblox,
Yes.
one of your favourite companies.
Yes.
And we will be talking about their direct public listing in the US last week, what it all means, and then more broadly, what's going on with how you list.
Yeah.
Direct public offerings, SPACs.
Yeah. IPO.
Is it, well, yeah, the IPO. So we'll be breaking it all down and just trying to unpack it all.
Vibing it out.
Yeah.
Yeah. If you'd like more information on Equity Mates, head to equitymates.com. Otherwise, you can email us at contact@equitymates.com. But until then, we'll chat to you tomorrow.